Ladies and gentlemen, good day and welcome to Q4 and FY2024 earnings conference call of HI Tech Pipes Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anish Bansal, Whole-Time Director of the company. Thank you, and over to you, sir.
Good morning, and welcome everyone in our Q4 and FY24 earnings conference call. I'm joined on the call by Mr. Arvind Bansal, Executive Director and Group CFO, and Mr. Arun Sharma, Company Secretary and Compliance Officer of the company. Today, it's a pleasure to discuss the financial performance of the company, which, despite a year marked with turbulence in HRC prices, has demonstrated resilience, adaptability, and commitment for the achievement of its vision. During FY24, we have recorded ever-highest revenue from our operations of Rs 2,700 crores as compared to Rs 2,358 crores in FY23, a growth of 13% YOY. Sales volume increased by 10.5% to 3.91 lakh tons in FY24 as compared to 3.54 lakh tons in FY23. Capacity utilization has increased from 60% to 67% in this year. EBITDA increased by 11% to Rs 115 crores as against Rs 103 crores in FY23. PAT increased by 16.5% to Rs 44 crores in FY24 as compared to Rs 38 crores in FY23. During this quarter, revenue from operations declined by 3% to Rs 681 crores as compared to 702 crores in Q4 FY23 due to reduction in steel prices. Volume remained flat at 107,000 tons. EBITDA improved by 4.7% to Rs 35.35 crores versus 33.75 crores in Q4 FY23. EBITDA per ton has improved by 5% to Rs 3,280 rupees as compared to Rs 3,147 in Q4 FY23. PAT declined by 29% to Rs 11.2 crores as compared to Rs 15.9 crores in Q4 FY23 due to steep decrease in steel prices and increase in finance costs. Now let me take you through the operational highlights of the company. During this year, the company has supplied its material to various prestigious projects across the country. To name a few, Narendra Modi Cricket Stadium, the world's largest at Ahmedabad; Surat Diamond Bourse, the world's largest building; high-speed rail corridor for Mumbai-Ahmedabad bullet train project; Jal Jeevan Mission, world's largest portable drinking water program; Noida International Airport, Asia's largest upcoming airport; Adani Green Solar Park at Khavda, world's largest renewable energy park. We are inching towards achieving our vision of 1 million tons, and during the year, the company has started commercial production of its much-awaited greenfield manufacturing facility at Sanand Unit 2. This facility of 1.7 lakh tons of installed capacity is fully equipped to produce complete size range of steel pipes ranging from half to 16 inches. This facility is one of its kind and is capable to produce best-in-class solar tracker top tubes and large diameter pipes, which are currently in a big demand across the sectors, especially water, infra, and green energy. This facility will significantly contribute to increase value-added products and operating margins of the company. Further, construction activities at Secunderabad Unit 3, with proposed installed capacity of 1.5 lakh tons, is in full swing, and hopefully commencement of commercial production will start in Q4 of financial year 25. This facility will help us penetrate deeper in northern and central India. The project progress of phase 2 of Sanand Unit 2 for capacity addition of 1.1 lakh is also on track and is expected to start within this current financial year. Demand drivers. The Government of India has taken the vision for Viksit Bharat on the 100th anniversary of its independence. It opens up a lot of opportunities for every industry, particularly infrastructure and construction sector. Huge government as well as private capex is expected to be spent in coming 4 to 5 years, which leads to increase in steel pipes demand additionally. All the above developments are setting our stage for robust coming financial year. As we move forward, our strategy is clear to maintain financial discipline while driving growth through innovation and market expansion. The foundation we have built is strong, and I'm optimistic about what the future holds for high-tech pipes. We are poised to not only meet but exceed our financial goals. We may now open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hemant, who is an individual investor. Please go ahead.
So thank you for providing me the opportunity. Actually, I missed your initial comments. You told us about the Secunderabad unit, right? The Sanand unit with 1.1 lakh MTPA capacity, when is it going to commission?
Sir, in Sanand Unit 2, we commissioned this project in the month of January, and we started commercial production in the month of March.
No, that is fine. But after Secunderabad, I guess we have one more lined up, right, sir?
Yes. So that is the phase 2 of Unit 2, which is of a capacity of 1.1 lakh tons, and the construction, we have started the construction for this project at Sanand.
It will be phase 2 of Sanand, right?
Yes, correct.
And it is, sir, when it's expected, sir, the commissioning?
In Q4 of this financial year.
So, Secunderabad as well as Sanand phase 2 both are expected in Q4 of FY2023.
Yes, sir.
And sir, one more thing is, what I wanted to highlight is we are missing our guidance on the EBITDA per ton. Is it basically due to the reduction in steel prices?
Yes, sir, you are absolutely right. But in Q4, we saw a steep steel price reduction to the tune of 2,500 to 3,000 rupees per ton. This is unprecedented. But, even then, the company showed its, resilience and, our market penetration and, our strong network. But, the EBITDA per ton hovered around 3,200 rupees despite a steep price reduction, steel price reduction. But now, the steel prices are aligned with the international prices, and we don't see any further steel price drop from here on.
So, sir, what is the guidance for EBITDA per ton in FY25, and how do we see the company on a quarter-on-quarter basis?
The company is doing the EBITDA per ton in the range of 3,700 to 4,000 rupees on a blended level. But the steel price reduction, this erodes about 400 to 500 rupees per ton.
I got your point, but sir, how do we see the EBITDA per ton in FY25?
There will be definitely increase. Our internal target is 4,000 rupees per ton. And, the market and, once this election period is over, we expect huge flow of, orders, especially on the infrastructure side.
So, sir, do we see any lean period because of elections? I mean, do we see a weak Q1 due to elections?
Sir, what has happened is, the new orders, the new tenders by the government that are on hold. So I think we will maintain our volumes, but a big jump in terms of orders we'll see from mid of Q2. So
I mean, is it fair to assume a degrowth in Q1 on a quarter-on-quarter basis?
No, sir. The demand is strong because the steel price has stabilized, so restocking has started happening at the distributor's end. So there's no degrowth in Q1. There should be a good growth.
And as per a media interview, we had initially guided for 4.5 to 5 lakh tons of sales volume.
That remains intact, sir.
Okay, sir. Okay.
Thank you. The next question is from the line of Pradeep Rawat from Yoga Capital. Please go ahead.
Hi, good morning. Thanks for the opportunity. So my first question is about the industry size and what is our market share?
Yeah, good morning. Good morning, Pradeep. The total estimated market for ERW steel pipes is around 8 to 1 million tons, 8 lakh tons to 1 million tons. This is, hello?
8 lakh to 1 million tons.
Yeah, this is a per month. So basically on an annual basis, 10 million tons.
Okay. And what is our market share?
So we are targeting, this year, 5 lakh tons. So you can say about 6 to 7%.
Okay, so what is our long-term target for market share?
So we are growing by, we are building our capacity. We are, scaling our production by 20-25% per annum. So that, that should be intact for next 5-7 years.
Okay, so my next question is regarding what is our raw material and how do we manage fluctuation in raw material prices? Do we hedge our raw materials or something like that?
So our raw material is hot rolled steel coils. We source it from primary producers. And, in terms, this Q4 was, the extreme month where we saw a steep decline within a single quarter. So we try to, to book as many as fixed price orders. There's, we hedge it not, naturally by the orders, and we try to, procure the material just before the production. So that is how we try to manage this volatility.
Okay, so on an average, how much time does it take to convert the raw material and sell it?
So approximately 40 days. 20 days we maintain our raw material inventory, and 20 days is finished goods inventory. So you can in totality you can take 40 days.
Okay, fair enough. And taking a step behind over the years, I can see our operating margin has consistently declined from 6% to now 4%. So what is the reason behind this?
Sir, in our industry, we are working on EBITDA per ton basis. So, if you see the EBITDA per ton, that is almost stable. In last 2 years, we have seen the steel prices, fluctuating very, very widely. But now in Q4, the prices, the domestic steel prices have aligned with the international prices now. So I think with no more, steel price fluctuation, I foresee, the EBITDA per ton, which we are targeting of 4,000 rupees per ton, should come there with the kind of value-added products that we have right now.
Okay, so our value-added product portfolio stands at 30%.
35. So this year we closed our total VAPs share at 35%, and this year we are hopeful of in excess of 40%.
So if we assume that our VAP share would be constant, so how should you see sustainable EBITDA per ton from here on?
So 35% we are targeting our VAPs in above of 40%. Number one.
Yeah, if we assume at 35% constant.
So there are few facilities, the Salem 2 is completely value-added products. The top tubes, the large diameter pipes, and there are some special SKUs being developed over there.
Okay, so these value-added products have higher...
Whatever added capacity is coming is towards value-added products.
Okay, so these value-added products have higher margins. So what kind of margins do they get, like EBITDA per ton basis?
4,000 to 5,000 rupees per ton.
Okay. So my next question is regarding the margin only. I can see your peers have similar peers to you have higher margins than you, like 6-7%, close to 6-7%. So what could be the reason behind it?
Sir, if we talk about, the industry leader APL Apollo, they are doing 4,200 rupees per ton EBITDA on a blended level.
Yes. So why their margins are better than us?
So sir, the scale is there, and their your share of VAPs is almost 50-55%.
Yeah, if I see JTL Industries, they also have 6-7% margin, and the scale is similar to us. So why is that difference?
So sir, basically, when we talk about JTL, it's not the right comparison, because there's a half of their share is in the secondary steel products also. So
Okay.
from the recycling. So that's not the ideal peer to peer. So when we talk about JTL, that is the most nearest competitor.
Okay, understood. And regarding our trade receivables, that has increased 50% year-on-year in FY24 as compared to 13% rise in top line. So how should I read it?
So sir, in this Q4, we had big orders from the Jal Jeevan mission, and we had supplied big quantity there. So typically, the receivable cycle days is 45 to 60 days in this scheme. So I think this should get evened out in the coming quarter.
Okay. So
it's a temporary increase.
Okay. So we should see like it's going to be normal.
Yes.
Coming years.
Yeah.
Okay. And the other question is regarding the discount we give to our distributor or sales agents to push sales. So how it has been right now, and how is it been historically?
So this Q4 we had to give some extra discounts. Other than that, the discounting is as per the industry norms. It's not high. So just to safeguard their inventory loss, we had given some additional support. Other than that, it is okay.
Thank you. The next question is from the line of Rahul Agrawal from Bandhan Mutual Fund. Please go ahead.
Yeah, thanks for the question. How much would have been the inventory impact?
Sorry to interrupt you, sir. Your voice is very less. Can you come near to the mic and speak, please?
Just a second.
Still lower, sir, but better.
Sure. How much was the inventory impact in Q4?
Sorry to interrupt you, sir. Your voice is breaking now. May I request you to use your handset, please?
Yeah. Is this better?
Yes, sir. It's better now.
Yeah, I'm asking how much is the inventory impact in Q4? Let's say it was normalized, so then what would have been the EBITDA pattern?
Yeah. Good morning, Rahulji. So, in the Q4, the total steel price reduction was to the tune of 2,500 to 3,000 rupees per ton. And our total impact on EBITDA per ton due to this factor was around 400 rupees.
400 rupees, okay. Going ahead in Q1, so you said there is some bit of an increase. So we should see an inventory gain. That's a fair assumption?
Yes, sir. Let's hope so, sir.
Okay. And volume you mentioned for this year will be in the range of 450 to 500,000.
Yes, sir.
More because given your capacity now.
Because we will have the installed capacity at 7.5 lakh tons, and if by considering this is the first year for Sun 2, so 4.5 lakh tons is the minimum, which is at 60% on a blended level, and the optimistic case is 70% utilization, which will take to 5 lakh tons. So we'll hover between this.
Okay. And your journey towards, let's say, 1 million ton, will it start this year or it's mostly a next year phenomenon?
So 7.5 is already there. and another 2.6 will get operational in Q4, end of Q3 and beginning of Q4.
So at the exit of FY25, you should be at 1 million tons. That's a fair.
Yes, sir.
Great, sir. Thank you, and all the best.
Thank you, sir.
Thank you. The next question is from the line of Pallav Agrawal from Antique Stock Broking. Please go ahead. Mr. Pallav, can you please unmute your line and speak? Mr. Pallav? Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Shikhar Mundra from Vivok Commercial. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Yes, sir.
Yeah. So, out of the total capacity of 1 million ton, after the second phase of expansion, how much of it will be value added and how much will be the normal capacity?
Sir, about 50% will be value added products.
Okay. And what is the EBITDA per ton difference between value added and normal?
Sir, the value added products fetch EBITDA per ton around 5,000 rupees per ton. 4 to 5.
Okay. And what about the other capacities?
2,500 to 3,000 rupees per ton.
So on a blended basis, we'll be looking at around 4,000 EBITDA per ton. Is that right?
Yes, sir. That's correct.
Okay. And for the value-added product mix, I mean, how big is the market? Because we are aiming to do eventually 5 lakh tons of volume at optimum utilization. So how big is the market for that?
Sir, the margin for value-added products is growing. Like, I'll give you one example, like solar top tubes. This is the new addition in the industry. And, only a very, very selected few players have this opportunity because of, the kind of infrastructure that is needed to produce these tubes. So this is a big opportunity. And then, talking about high-speed rail, so all these big MNCs, they have developed some special SKUs to be deployed in high-speed rail projects. Our large diameter, that 16-inch, only a handful of companies in India are able to produce this. And going forward, we'll have specialized coatings in this high diameter range that will also fetch us a better, EBITDA per ton.
So, for example, the first application you said about the solar, so can you quantify, like in one, how much megawatt of energy, how much of these solar tubes are needed?
So, sir, one megawatt requires 20 tons of solar top tubes.
Okay.
And in 1 gigawatt, it will be around 20,000. So you can, you can do the math.
Okay. And so are our competitors, I mean, who are the major competitors who are also going big in value-added products, for example, in the solar tubes and the other applications, the railway applications?
So right now, I can talk for myself. I think, I think we have taken the lead in this sector, and we have tied up with the large MNCs to supply this, and we have taken the initiative in this.
Right. And between the product specification, like value-added products, is it just a forward integration of the tube, or is it like a completely different thing? So when it comes to manufacturing?
So, sir, basically, the shapes are different, the raw material is different, the coatings are different, and it is like highly customized.
Okay. Right. Sure. All right. Thank you, and all the best. I'll join the queue back.
You're welcome.
Thank you. The next question is from the line of Pallav Agrawal from Antique Stock Broking. Please go ahead.
Yeah, hello. Am I audible now?
Yes, sir, you're audible.
Yeah, okay. Hello. Good morning, Annie. So my question was on, the warrants. So I think we have, some probably 2.8 million warrants outstanding still. So how much of money, when is that expected to get converted to shares? When can we expect the money to come in to the company?
So, sir, I think it should happen in like 1 or 2 months maximum.
Okay, sir. And what would be the quantum of, what would be the amount that would come in?
Sir, about 100 crores.
About 100 crores. Okay. Also on a capex outlay. So, what are we planning to spend in FY25 and 26?
Sir, approximately 50 crores is the remaining, on the capex side.
So this is for each year, sir, or totally across both years? Totally be 50 crores.
To recharge this 1.1 million. Because some capex is there in CWIP also.
Sure. So 50 crores across, that's the total capex, not for each year. So 50 crores across maybe 25, 26, across both.
Yes, sir, because we are completing our 1.1 million tons in this financial year itself. So whatever is there will get deployed in this financial year.
And maintenance capex, regular capex is not very significant. So that should not add too much to this capex.
No, not too much, around 10 crores.
Sure. So also on our solar torque tube. So I think we would be among the leading pipe company because so any of your competitors are actually planning, because we on the APL call yesterday, so they also mentioned that they were also targeting the solar torque tubes. So is there an entry barrier, or or some other players also can start targeting, given that there's a significant opportunity in this space?
Yes, sir. Apollo has also started, the kind of infrastructure that is required for them. It is very, very, technical, and technical wise, it is very, very, big challenge to, break through this particular product. We took almost like 5-6 months. We did the R&D in-house, and we got this product developed. So I think Apollo is maybe on track, but the market opportunity is huge. I think 2 or 3 companies cannot fulfill the requirement.
Sure. So it's large enough for all players to to survive in this space with good margins.
Absolutely, sir. Absolutely, and it is just started, and I think it will snowball, year after year.
Sure. So now, you mentioned steel prices have stabilized, so restocking, destocking phase also would be over. So there would be no, are we still offering those discounts or incentives to dealers, or, that is now, tapered down in the first quarter FY25?
No, sir, we have withdrawn all the discounts.
Sure. So this, whatever 400, 500 rupees of loss in EBITDA per ton should gradually come back over FY25.
Yes, sir. Absolutely.
Sure, sir. Okay, sir. Yeah, thank you, Anish, for
You're welcome, sir.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir.
Yeah, good afternoon, Vikas bhai.
All good, sir. Sir, first question regarding this API-grade pipe mill status. So if you could tell us how much is completed, what's the course of action from here?
So, sir, large diameter pipes, we have started with water pipes, and the coating facilities we will be adding on at the end of this financial year. So, and the certification process. So, I think within this financial year, this should be done.
All the certification.
Yes, sir. Yes, sir. And some equipment is also there. Some testing equipment is also required. So it should be done within this financial year.
Understood. My second question regarding FY26. So the 1 million ton capacity is coming by FY25, and so logically in FY26 we will see a big jump in the volume, at least 6 to 6.5 lakh ton.
Absolutely, sir. Absolutely.
Understood, sir. And lastly, sir, value-added mix, we have improved to 35%. Our FY25 and FY26 goals in terms of value addition, if you could give us?
Sir, on the conservative side, I think 40% is a fair assumption on the conservative side. But our internal target is more than that.
Understood. And sir, how do you see your debt moving? Has it peaked out, or do you think that there would be some more debt addition because of largely working capital debt only? So if you could give us some guidance on that.
Sir, I think, on the long-term side, most of our capex is almost all, we are almost at the, the patent. So that is, that should not go up. There might be marginal increase in working capital in FY20 on FY26 basis once we do a volume of 50,000 tons on a monthly basis.
Understood, sir. Understood. Thank you and all the best.
Marginal increase, not a big one.
Sure, Aniki. Thank you and all the best.
You're welcome, sir.
Thank you. The next question is from the line of Sanchita Sood from Robo Capital. Please go ahead.
Yes, good morning, sir. In your opening comments, you mentioned that your vision is to reach a volume of 1 million tons. So by when exactly do you see this happening, and how do we plan on reaching that target? What will be our growth drivers to get there?
Hi, Sanchita. So basically, as on we closed this financial year at 7.5 lakh tons with the newly commissioned unit in Sanand. And we have two more expansions coming up in the current financial year. Which the one is in UP and another was in Gujarat. And we'll be completing this expansion in Q4 of the current financial year. Demand drivers there are many demand drivers. I mentioned in my opening speech. After the election phase is over, we are expecting a huge capex on the infrastructure side from the government and also the private capex. So all in all, we see very healthy demand for ERW and pipes across various industries.
All right. Thank you and all the best, sir.
Thank you. The next question is from the line of Prathamesh D from Tiger Assets. Please go ahead.
Yeah, sir, just wanted to know on the industry side, specifically about the Jal Jeevan Mission. So if you can give some insights about it, that will be really helpful.
Yeah, good morning, Prathamesh. So, last year and, a year prior to that, we have seen, government spending almost to the tune of 1 lakh crores towards this scheme, Jal Jeevan Mission. And in the current financial year also, they have allocated the same amount. So what I'm expecting is, right after the elections, the ordering or the reordering process will start happening from July onwards.
Okay. So how much is our market share in this segment, like water segment, if you can?
So in Jal Jeevan Mission, there are several kind of pipes that are being consumed, right, starting from, ductile iron pipes to helical saw pipes and ERW pipes and GI pipes. So I think, our company is among the, top 5 suppliers in this scheme on a pan-India basis.
Okay. Okay, sir. And wanted to know how much volume guidance are we giving for FY25?
Between 4.5 to 5 lakh tons.
Okay. Okay. And so just wanted to know, I think you have given EBITDA per ton guidance of 4,000 rupees for FY25, if I'm not wrong. And on the other side, you are saying the VAP will contribute around 40%, which caters margin around 4,000 to 5,000 rupees.
Yes.
So ultimately, you are saying the EBITDA per ton will increase by 1,000 rupees. So just wanted to know some calculation behind it. I'm not getting what will contribute mainly to the increase in 1,000 rupees of EBITDA per ton.
So currently we are at 32 to 3,300 rupees per ton, and additional 700 will come from the higher value-added products. And this last year we have seen steel prices dropping by almost 8,000 to 9,000 rupees per ton. And now the steel prices have aligned with the international market. And this steel price decrease was eating away our EBITDA per ton. And I think within this financial year, the steel prices have stabilized, and we should not face any any inventory loss, which was taking away the EBITDA per ton.
So basically, from 35 to 40%, like 5% increase of VAP will contribute around 700 rupees of increase in EBITDA per ton, if I'm not wrong.
Yeah, and
right.
also the steel price support. If the steel price don't fall, we will not incur any inventory loss.
Okay. Got it, sir. Thank you. And all the best.
Thank you. The next question is from the line of Ronan Sioni from Share Limited. Please go ahead.
Yeah, good morning. Good afternoon, sir. Sir, I wanted your view on the debt part. Like you said that 100 crore warrants money would come in and balance less than 50 crore capex is expected in this year. So, should we see, debt going down from 366 or should we see some repayment happening in FY25? What is your target and debt target for FY25?
Yeah, good morning, sir. So basically, we will definitely see, reduction in the long-term borrowing. And regarding the short-term, because the volume will be growing, I see the short-term borrowings, they should stand where they are. We'll be expanding our volumes by almost like 40% in the coming 1.5 years.
Oh.
So
and the solar, this opportunity you highlighted. So, what portion you wouldn't be having, the mix right now, right? The proportion of tubes which will be catering to this segment. So, is there any target that how much upcoming capacities would be catering to this segment, or from the existing ones you will be catering to this segment?
So, sir, we have just started producing these tubes in our Sanand unit in the month of March, and I think and we are scaling up also. So I think we see a sizable volume from this, but to give an exact number to this, I think I'll be able to give you exact number in the coming quarter. What volume will close for solar top tubes for this year.
Okay. And so lastly, on this value-added versus general products, so what we heard from my peers call also that standard products have holded their EBITDA pattern, but there was a marked decline in the value-added products, given the support to the vendors. So, what is your view? Like, have you given support on the general products or value-added products? And, has there been a reversal, as you said, in both these products?
So these discounts were basically for the dealer, in the dealer network.
Right.
No, not for the value-added products.
You didn't see any value-added products related decline increase in discounts?
No, sir. Personally, I don't think so.
Okay. Great, sir. Thank you very much for understanding.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to Mr. Anish Bansal for closing comments.
In closing, I would like to express my gratitude to our dedicated team, our partners, and our shareholders for their continued support and trust in our vision and leadership. Together, we are setting the stage for a prosperous future filled with exciting opportunities. Thank you.
On behalf of HI Tech Pipes Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.